Hello, welcome time traders. Here we have another episode or short snippet of what is possible when we're using quantitative analytics and analyzing the events of the world. So here we just have very simple metrics, quantitative analysis on the day-to-day basis of what this chart will do based on this specific date and the correlation of where we are now. So if we look at our charts now, where current SSP is trading, as you can see, we're way above that since August. So it looks like it predicted well, especially if we look at the overlying trend line, which is this green one here. These are the lower maximums, the higher maximums, and whatever the neutral overlying position is, because I don't know the definition, but you will know whether it's the purple or the middle green or the yellow or the blue. And this is the numbers that we're at right now. This is how you start the video. Boom. Now next side. Now we're going to see how we can use it on a very specific basis with a very specific date or a very specific holiday. Right now we're going to run Tuesday, December 7th, Pearl Harbor Remembrance Day. Now we go and we check our current calendar here from our Almanac, but really what we're going to do is just run November 7th. We're going to find our correlations, and we want to be specific. I want to trade only S&P 500 and anything with options. And I want it to have an average gain above 1% with an accuracy of 87. I want it to be a close-to-close trade with a pattern length range of 1 to 5 days and a history range of 9 to 33 years. I want my profit factor to be above 10, so it's giving me decent probabilities of success and profit factors. I could also change the p-value, and I could do Sharpe ratio, or I could just filter by them. So here are the results. This is the results if I change it and sort it by average gain. The one that has an average gain for the last 10 years, holding for 5 days, is FAS. That's a 90% in the 10 years. So out of the last 10 years, 9 of those years, this exact trade worked. Now, maybe you don't want to run it like that, and you want to run it with the accuracy. Now we get VIPs. That means that if you buy VIPs on December 7th, you hold it for 1 day, that gives you an average of 1.47 return. 1 day, 9 years, 100% of the time. So let's look a little more in depth on that. Right? So we got VIB, that's one of the other charts in there, and then VIPs. This is the VIPs. So this is what we're looking at. Very detailed analysis. You break down everything. This is the trade. This is how it's happened in the past. This is what we do. It seems like this is a good trade. You know what? I'm going to put this trade in. And we're going to put it in, right? VIPs, December 7th. Now we do VIPs. VIPs seems to be trading very cheaply, around $9.68. And so we're going to see if it has any options. There we go. We'll do a put, and we know it's a 1 day trade, so maybe we could do December 3rd, right? And we'll do it at 9, or we could do basic, and we do a naked at 9.50, and that's paying us $20 per contract. With the underlying risk of sell to open, purchasing power impact about $9,000, and total profit possible $244. Now here the idea is just to sell it with a few cents of profit, right? So we put in the trade, we price sell. Then we check it out the next day, and if we're able to close the trade at 10 cents instead of the 25 cents that we got it at, then we made 50% profit on that trade using our sale lane of options strategy. Now VIPs is a very cheap stock, so we're going to look at other stocks to determine what the probabilities of success of those are, and if there's more premium that we could get from. So this is Allegiant. Allegiant seems to have a decent winning ratio as well. It's only a 3 day hold, and only 1 year it did not work out, of a downturn of 2% out of the last 9 years. So let's do A. Let's search up A. There's A. That's $153 stock. That seems more like it. So here we're going to go to spreads. We're going to type in A. We're going to put in puts. That's a $3-day hold. So we don't have weekly options. We only have monthly options on this one. So here what we could do is 153 right now at the end of the day today. It seems like there's been a downturn, and it's 153, and you put 150, right? You put September, the same thing, and you put 135, and then here you say submit, and okay. 3, right? So here, instead of my purchasing impact power when I sold naked was 9,000, here I'm doing a spread. I'm getting a purchase impact of $3,900 with a total payout of $506. This is a theoretical trade we could put in from now, but the trade doesn't start till December 7th. Today we are in November 29th. So we could also check the historical facts on that to see if we put it in today, do we get more return than we were to do the trade for December 7th? And that's pretty much the video, man. 5 minutes, you don't even need that.